Good morning, everyone, and welcome to another episode of Capital and Context with myself, Mark Inslee. I'm just going to adjust my mic slightly there. I think that's probably better. It's been 15 years, Sam, since the global financial crisis.
You feeling old?
Yeah, I remember it as...
It's more than 15. It's nearly 20.
Was it nearly 20?
Yeah.
That was a rubbish prompt in my...
It was a rubbish prompt.
You set me up for failure there,
we
didn't
can blame.
you, hey?
There we go. We talk about AI. There we go. That's where AI goes wrong.
So, yeah, we just sort of really wanted... We sort of said we'd sort of, talk about... what we feel are coming back to maybe be some knock-on effects of the activities and measures that were taken at that time. As I say, I do remember it vividly. It was pre-AWM, and I was a
I'll prompt you on that afterwards.
Young cheap resource on a trading desk. So luckily, I kept my job. But yeah, no, it was
different industry.
I don't. There hasn't been a time like it. All the other crashes, I think, since then have sort of happened and turned around quickly. Like we've had many of them, but I remember like calling someone, do a trade in the morning, and then you call them back to reaffirm it in the afternoon, and that person doesn't work here anymore.
Really, wow.
That's all I remember of. Like, not all I remember.
No,
I
but yeah.
remember then how it spread to bear But I think that's the one thing I remember, how I used to call people and then they wouldn't be there. I'd do a trade with them in the morning and they wouldn't be there in the afternoon.
We trust that they're fine now, but we'll have the absurdity of
Yeah.
it. But I know what you mean in terms of like the crash, etc. Like what I think one thing that scares me a little bit from our industry is we have beyond one generation, getting close to 2 generations now, people in our industry that don't remember it. And actually, I think what from my perspective, I don't mind because it makes me a more rounded individual. But from their perspective, because they've lived through a lot of these like quick crashes and recoveries, I think it means that their risk aversion is very different. They don't see that actually when you get these big black swan events, it can go very bad.
Yeah.
So yeah. But happy Thursday, everyone.
Yeah. So, moving on from that, obviously a lot going on in the UK. What new Prime Minister and a change of Chancellor. So could you bring everyone up to speed with what's been happening in that space and how how the decisions on those things been made as well, like what is the actual switch between one person making decisions and another?
I find it,
because Starmer still would have been at the World Cup, right? But it feels like things have happened despite the fact that he still would have been there as the representative PM.
Yeah, that's kind of crazy actually, as a lame duck PM basically. Yeah, so obviously, Keir Starmer wasn't the world's most popular Prime Minister. I think a lot of that is because his communications was dire. For your own party, despite the fact that you've won a huge landslide, to then be ousting you basically less than 2 years later, I think says a lot. Andy Burnham was very, very popular as mayor of Greater Manchester. But we've ended up with this weird situation where he basically ran unopposed for the Labour leadership. But we've ended up with this weird situation where we now have a Prime Minister that wasn't even an MP at the time of the last as a result of the last general election. And I think that's what's different about when we've normally had changes of Prime Minister between general elections, is trying to work out on a constitutional basis, like, the mandate that he's been elected on. Is like he's not going to be running this same kind of like manifesto policies, etc. Just find that a little bit kind of something to be aware of. The markets, and this is where I think us talking about 20 years ago and today kind of feeds in. So obviously everyone's scared now of whenever there's a new Chancellor. So we've had, name escapes me immediately. I'll just double check my notes because otherwise I will forget.
The last?
No, so it's John Healey.
Yeah.
who was. This is one thing that upset the markets a little bit earlier this week. So John Healey, don't get me wrong, comes across as a very competent minister. What I think spooked markets is the fact that John Healey resigned over the fact that basically the Ministry of Defence wasn't getting enough funding. So straight away there's the kind of like, oh, is he going to be a spendy kind of Chancellor? So that spooked the markets a little bit. And that kind of feeds into, let's go back to Liz Truss, who somehow is still doing the rounds online despite everything that's gone on. When that whole guilt element sell off, which was remarkable, a lot of that was due to basically lack of liquidity in the market. And that's what kind of like, remember quantitative easing from post GFC, that was what it was all about, just trying to pump liquidity and stop basically the markets failing. Since 2022, when inflation went through the roof, we've had the opposite going on, quantitative tightening. And then like in America, where they've just been letting things mature, over here, we've been actively selling off. The Bank of England's been actively selling off their balance sheet. And what's been interesting is, so there's also been a maturity of basically a COVID era short-term lending kind of facility for banks. That's been maturing off. So we got a situation where basically from a gilt perspective, you're needing a more active banking sector to be able to purchase gilts, but also they're having their own liquidity kind of not crisis, but certainly less fluid, let's say, than they once were. So there's been for a little while now, Bank of England repo facility. So a repo facility is basically, if you were to say you're the Bank of England, you say you give me X amount of sterling, but I'm going to want security in the form of gilts. And basically what the difference is what the effective interest rate is the difference of the value of the gilt to what you give me sterling for a period of 1 week. So after a week, you give me the gilt back, I give you the cash back. That facility is being used at record levels as of last week. So last week, I think it was, this comes with a caveat, I don't check these numbers because I'm trying to remember them off the top of my head.
People giving gilts back and getting the cash? Or
so it's a repo. So, the banks have been asking for cash, but they've been having to give gilts as collateral. Yeah. So 160 billion was requested last week, which was a new record. The record as of the end of last year was just over 100, and if you go back 12 months, about 70. So you've got this laddering effect going on. Now, the bank reserves were 600 billion, but seeing this usage going up quite a marked rate, it's starting to make some people question how far are we off of the floor of the reserves that the banking system needs in the UK to carry on working functionally. Now, the Bank of England the Prudential Regulation Authority, which is quite an often overlooked regulator, but that's basically the regulator for banks. Yeah. That's actually who you get your license from to be a bank, rather than say an e-finance company, read Revolut. They've said, look, this facility has been designed to be an ordinary use facility, very much trying to downplay to ratings agencies, to markets in general, that there's nothing too much here to worry about. But you can't help but wonder the ramp up here, and also 160 billion off of what was 600 billion. That's saying that you could be using 25% of your reserves is being made up by repo. So it's just something to be aware of, I think, at the moment, because we could end up with, if there's a big gilt sell-off, going back to that 2022 situation where people are going to have to keep on selling gilts to cover facilities that they got themselves into. So it's just something to be aware of.
Okay. When's the first event for the new Chancellor? So obviously, new Chancellor's been announced. When's the likely first potential policies to keep aware of?
So policies. So Andy Burnham's been announcing.
Budget's autumn, right? Or is it
Well,
autumn
yeah,
statement?
budget's autumn. Andy Burnham's been announcing a few ad hoc policies over the last week, which has come across a little bit scattergun, if I'm honest, and without a coherent plan. There's been lots of kind of like spending commitments, but not necessarily how you're going to pay for them. He has committed to sticking to the existing fiscal rules. So that was one thing that the markets took obviously positive. But he's been talking a lot about this is what I'm going to spend this money on, and this not necessarily where it's coming from. So, yeah, the budget is going to be, I think, quite a big deal this year. Let's be honest, we're dealing with very tight fiscal situation in the UK. Employers are dealing with quite a tax burden for employment of individuals. Hence why, youth unemployment and, under 24, recent grads unemployment there is looking really quite bad at the moment, actually.
Bad in terms of what numbers, though, because proportionally UK to the rest of the world, it's obviously...
Proportion to our kind of history. So it's... I don't quote me a figure off the top of my head, but I certainly know it's not great at the moment.
What is it, sort of like 10%, 15%? Or is it?
I think it's in that 10% kind of ballpark.
Which for the UK is high, I agree.
Yeah. Now, I've got to be honest, a lot of that's probably when I say this government, I mean since 2024, this government shooting themselves in the foot with the massive increases in the minimum wage. It just means that to employ someone for that entry level position where people starting off their careers is now just really expensive. And frankly, it's come out at a terrible time with AI. A lot of those roles that frankly you would have hired a recent grads for, you can get to do for this. So that hasn't been good. I just think that autumn's going to be interesting. Market didn't actually expect it to be this person. Sorry, I've forgotten his name all over again. That's terrible of me. They're expecting it to be someone else who's actually seemed to be fiscally quite cautious, but they got it wrong. Yeah. So
and Andy Burnham picked that himself, or
correct?
Yeah. Okay. So the Prime Minister picks.
Picks his cabinet. Yeah, in essence. And unlike in the States, it doesn't go forward in front of committee to be approved. It's quite.
No, it's good to refresh on these things because your fingers on the pulse on these bits.
Too much time in bed reading the FT. That's what happens there, unfortunately. And when I wake up,
some paper or on the iPad.
On my phone. I'm not reaching over for a paper or an iPad first thing in the morning.
I used to love the old crisp FT coming.
I still do run down the road and expense it. Yeah. Just because there are times.
What? It's literally like about £8.
Yeah.
I think
that's right. Every time I say to you about I'm trying to save money, I spend it on other things.
I think the two things I find the most expensive on the subject of inflation is the FT is a one-off purchase of the FT.
I'd like
and a one-off purchase of the Racing Post. £6.80 or something it was.
£6.80 for Racing Post.
Yeah, I remember it being like 99p.
Jeez, you straight away you're £6.80 down. You got to make that straight away.
Nearly a tenner down. Yeah.
So I'd like to point out there's more when there's an event day.
This is our
inflation.
This is the inflation watch section of the podcast.
I saw Freddo's also got ridiculously expensive today. It's quite interesting when you see people talking about Freddo's. You can tell how old they are, but when they say when they were a kid, they meant being. In this case, they said
Fredo.
Go with Freddo. It was just for the record, and you could probably work out how old I am. It was 7p when I was a kid. You're not quite old enough for it to be shilling or something else like that, are you?
Back to Gilts. Let's go with some of my counter questions in a morning meeting today. So obviously, government. I think irrelevant in this 1 month period. I think irrelevant of what they did or what they didn't do. I still feel. Like you touched on it, I still feel that Liz Truss era of the potential of something being interpreted wrong. I feel like whatever they did, there was always going to be a little bit of a
there's going to be
a little bit of a yield increase.
Everyone, yeah, you're right. There's a caricature of what's going on at the moment.
Does there have to be maybe this is actually just like, and I'm not saying it is business as usual, but irrelevant. Like, I think 6 is
it's a big psychological number.
It's a big psychological number. And I mean, like, you know, like Italian, like when Italian bonds went in that region, when like, well, Italian's my example, but you know, then they became like some of the best performing in the world, right? So I feel like for a developed market like 6, at some point there's also very smart people that, as I say, are structuring like I touched on, structuring mortgages, structuring annuities, and you know, surely they're like rubbing their hands like this, thinking, I can now pair this 20-year liability at 6%. And
funny you should say that. I've been looking at mortgage-backed securities lately as well for a portfolio. So yeah, no, I agree. But the problem is, though, is I think when it comes to how we work in the UK, it isn't until basically the sky's going to be falling down that Parliament actually realise, like, come on, there's too much in UK politics now that's too short-termist in their aims and their goals. It's always just thinking about the next general election, whereas I don't want to sound like I'm putting on rose-tinted glasses, because for one, I wasn't alive in the period I'm talking about, but two, because who wants to do that? But you get the feeling going back previously when the idea of people being more statesman kind of people, they're thinking about actually the 2030 year kind of where's this country heading, rather than actually I just want to be in a good position in 2 years time. So it means that as a result you just end up with, right, I'd like to point out we are not endorsing any one particular party when we talk about this, but the one thing Burnham has committed to, for example, is the triple lock. Now, to my mind, the triple lock is fiscally ruinous, because it basically commits the government in not in wording exactly, but it basically commits UK government to the state pension becoming an ever increasing part, not of just government spending, but of GDP. It's not sustainable in the long term. Unfortunately, it cheeses off an awfully large percentage of the people that have more free time being retired to go out and vote. So it's politically really difficult to get rid of. But I don't know what that driver is going to be to make the UK governments, UK politics, less short-termist, and therefore reduce some of our risk premium. Let's not forget, Italy had their sky was falling down moment 15 years ago. That's why it became such a good performer. There isn't that driver yet, I think, in the UK for that to happen. And that's why, even though if you are in a fortunate position where, say, like you have annuities, which is basically you buy it and you hold it for 20 years or whatever, great, you're locking in, it's not far off now, 6% for 20, 30 years. Brilliant. Your real yield is fantastic. I think if you hold it as part of a floating OIC for those long end, I don't know. I'd like to point out the Gilts story isn't just a UK story, though. Developed market long end has been selling off quite a bit.
Just messaged my team on annuity quotes, because you're right, there's a couple that we should re-quote on.
Yeah, but it's not just a UK story, though. Developed market long end sold off quite a lot in Q2, which I've got to talk about quite a bit in like 5 minutes.
Okay.
But yeah, it's an interesting one. You know, the US has a very different set of problems, but they result in the same outcome.
Yeah. Another whole topic. I don't think we have that ability to buy back and control yields by buying gilts back and things like that.
No, it's annoying.
Right? Or do we?
I imagine the DMO have the ability, so the Debt Management Office, which is the actual government department that does actually issue gilts. I imagine they have the ability. It would probably end up happening. Let's be honest, there becomes a point when the tail end gilts get so expensive that government put a lot of pressure onto the Bank of England. The Bank of England has said that they will not intervene just because of political cock-up. You know, it has to be actually to maintain the functioning market. But there's got to be a point though where it looks a bit like, this is not good for sterling, for the UK in general. It's an interesting one, but we could have another. Let's not forget. I think it's 2029 where legislation says the next general election has to happen by. So we could have another 3 years of there's quite a few things in UK that are concerning me at the moment, which is why we tend to favour treasuries and short end, just because of the narrative in the developed market generally on the long end. I don't think is amazing in the shorter time periods. If you can hold it for a longer period, then but as we were saying, like you can afford for a 20-year, because rates have gone up so much, you can afford for a 20, 30-year to sell off by, 1/3% in a year, and you still end up flat because of the coupon you're getting.
What's 30-year corporate debt at the minute?
Don't tend to get much 30-year corporate issued.
They don't issue that.
No, tend to get most kind of 10-year.
Really comparable.
Though saying that is
So
becoming a little bit more.
What duration corporate would be at 6? What type of UK corporate debt would be at 6?
Oh, you'd be looking in high yield for certain. Definitely.
Still in high yield?
Yeah, definitely. Because
So
spreads are so tight now.
So something like Barclays would be a lower yield on a 10-year than a 30-year UK government.
Yep.
Really?
Yeah, very much. Yeah, definitely. Yields. Corporate risk spreads are really. They probably opened up a little bit this month, but they are genuinely really tight. Which was why, don't get me wrong, it hasn't helped the portfolios over the last.
Can we validate that for next week?
Yeah, easy.
Because that's.
But like,
it's an interesting comparative. What would you rather hold, a UK government instrument of 30 years or a corporate instrument of 10 years?
And I think Barclays is AAA. I mean,
Yeah.
especially if you're holding going on down the ABS space, so you effectively in their like tier 2 capital of Barclays, whatever, it'll be like 8% on like on a floating note.
Yeah.
So you don't have a duration to worry about, So it's all that kind of end of the space is quite interesting at the moment. But that's why we've been holding long shorts, so an alternative way in the fixed income space, just because of it's
No, I know
the
you
stress.
like that. You're good at you're good at the fixed income end.
Yeah, for the record, this is where me and Mark do tend to work quite well, is the fact I'm glass half empty, Mark's glass half full. So between the two of us, we work out a good position, but it does mean that I tend to do better on the fixed income side and Mark tends to do better on the equity side.
Yeah.
And that's your ego stroke done for today.
Yeah, well, you've got a webinar to go
got a job.
and prep for, so I think that's a good little political sort of feeler for the audience, with some sort of quite heavy bond stuff thrown in there, really. Yeah, I was going to do a review of my conference, but to be honest, it was a networking and party, so there was very little.
I think what you call it is research.
It was research, as in research the agenda a little bit more before you fly all the way to Berlin.
I did see it in your calendar. I was just like, why are you flying out for that?
I met some useful people from N8N.
Okay.
Like the founder was there, and they don't have a formal office, so everyone was remote. So for them, it was great. They were all meeting. So I was kind of just slipping into their like internal conversations. Of being like, oh, so great to meet you, and then like we talk about something topical for them. So
yeah,
cool. Yeah. All right. Thank you, Sam.
Thank
See
you
next week.
Cheers.
Bye.
Bye.